Thank you everybody for joining us for today's session. I'm Kavita Agrawal, the founder of EXP Invest, and you are here as part of the Let's Get Technical series, in which I come live every Wednesday at 5 p.m. Now, I understand that today is a market holiday, but that doesn't mean that our learnings need to stop. And when you're a swing trader like I am, holidays are actually a very good time to do some retrospective thinking about how you can improve your own strategies for swing trading, entry, exit, performance management. So today I want to talk to you about making entries and exits in the market for swing trading. The main reason why I want to discuss this topic with you today is that in swing trading itself, most of us get derailed because of our preconceived notions or our own biases, right? So while the logic behind swing trading is buy the dip, get in low, sell high, sell at highs. However, when it comes to practicing that, a lot of biases affect our decision making. What we end up doing is we end up, instead of buying stocks where there is a strong bull trend, we think that we might not get a good share of profits which are still falling, which have given rally maybe in the past trend, but this uptrend they're not really participating in, right? Some people may make the mistake of buying stocks which have already rallied a lot. So when I say stay with the trend, I don't mean go and join a trend which is dying or exhausted. So how do you determine whether a trend is strong? Should you enter right now or not? In the overall market currently, there are lots of different sectors. There are some sectors like infra, realty, metals, PSE, which have already given fabulous rallies. There are some sectors which have given rallies but have started to show signs of exhaustion here and there. Some examples from the PSE sector are there. Best, but more rally can be expected. For example, the realty sector is there. Then there are some sectors where rally did come, but now they've gone into consolidation, which is giving us signals of exhaustion. In my opinion, that is the financial sector or the banking sector, where I think some sort of exhaustion is the first example that I want to take our discussion forward, and we'll move on from different charts as we go forward. So now I'm going to share my screen with you. So this is my 6 chart layout, as you can see, but we will start obviously with the largest time frame because we want to get a sense of you have to make sure that you are entering the market when the trend is number one, bullish, two, it is still strong and it is going stronger, not getting exhausted. So Hindustan Unilever, if you look at the very broad trend, you can see that it's been a very strong uptrend from a very long period of time. Never make the mistake of assuming that just because a stock has been in rally for the past 25 years, it's going to be in rally for the next 5 years also. It is not necessary at all. Whenever you make a decision, you have to make sure you're making an objective decision based on facts, not assumptions. So first thing that I like to do when I start assessing a stock for swing trading is draw my trend lines. And in order to draw my trend lines, I like to do it from the large. So here I am looking at the 5-week time frame as my largest time frame. Some of you might have the question, why 5-week? It's such a weird number. Why not monthly? Simple fact is that all the time frames that I use, all the way from 3-minute to 5-week, they all have a common factor of 5 between them. 3-minute multiplied by 5, 15-minute, multiplied by 5, 75-minute, multiplied by 5 daily, multiplied by 5 weekly, multiplied by 5, 5-week. So this gives me a very nice fractalized view of the market. And to me, to the market, it doesn't really matter whether it's monthly or 5-week. A nice fractal zoom in, zoom out view and have a sense of scalability or proportionality there, right? What I can see here, the first sign of weakness that pops out on the 5-week chart itself, that this massive channel, which the stock has been respecting since I would say 2010, this channel has, for the first and second signal is that RSI on the 5-week chart is showing negative divergence. And if you move down to the weekly time frame, here also you can clearly see a negative range shift unfolding on the weekly time frame as well. What do I mean range shift? Even though the price is making higher highs or even similar highs, what you will notice is the peaks on the weekly time frame are getting lower and lower. This is showing slowdown of momentum to us. So for me, from a fresh perspective, Hindustan Unilever is not one of the stocks where I would like to make an entry in. The reason is very simple. See, even if this stock has a say range of 25% where it can oscillate, when we enter and exit in a stock, there is a good chance that we will miss out the first leg of the rally and the last leg of the rally within. If we are making a fresh entry, during a fresh entry, it's only possible to maybe capture around 30 to 40% of the uptrend. And if you're going to participate in a stock which is giving a not very strong bull trend, over there, your margin of safety is removed because you obviously cannot exit at the top. You cannot enter right at the bottom. There's going to be some shaving off happening there. So the part that you're going to get in between may not be sufficient. Moreover, when the broader time frame is giving us slightly mixed signals or not very strong signals, it means that the wave also that you try to capture is going to be pretty volatile. Like for instance, here in Hindustan Unilever itself, if you see these two circles that I've drawn, the reason I've drawn these two circles is because in the very, very past, if I saw, the trend of Hindustan Unilever on the daily chart was such that the RSI was not coming down below the level of 40. However, Since 25th October 21, this level of 40 has been breached multiple times, showing that there is clear-cut loss of or there is loss of momentum or exhaustion setting in. Broader time frame channel has been breached. Daily time frame is showing negative range shift. RSI negative divergences on the broad time frames. All in all, I'm not getting very positive signals here. As such, even if I do make a position at this stage, because it is so close to its resistance of around 2800, my objective for Hindustan Unilever would be to trail my stop losses very closely. And for any other stock, like Hindustan Unilever, that is giving me mixed signals on the larger time frame, my approach will be slightly more aggressive there, right? So let's with that move on to another stock, say HDFC Bank, right? So I'm still discussing stocks where what you should do if you see exhaustion or if you saw strong rally in the past. Now, banks have been everybody's to say in the past few months and past few quarters, and for very good reason. We can see massive movements with good volume participations. But now in HDFC Bank itself, if you take a close look at the chart, the first thing that I'm noticing is that 1700 is acting as a really strong resistance for the stock. Every time the stock tries to go above the 1700 level or 1800, it's not able to sustain it. It keeps coming back down. So this white rectangle is what I have drawn to mark that zone above which the price is not able to sustain itself. That being said, the volume pickup has been pretty good in HDFC Bank. But let's assess things from an entry perspective. That say, okay, fine, banking stocks were giving very good rally in the past. So technically, if they take a dip, it would be a potential entry point. So what is the potential dip that you would, or extent of the dip that you would look out for? So for the purpose of swing trading, the price action analysis is very important. Identify, first of all, where is the previous peak, where is the previous low. So irrespective of whether it's a bull market or a bear market, and I will explain how. When the prices are going up, a good time to enter a stock is when the price dips to the previous high. That becomes a potential support. So for example, here HDFC Bank is in a nice little bull trend. So a potentially good entry point would be close to here. And you will see the price when it took a dip came exactly to this same support zone and rallied. Now here again, the price rallied, but it did not sustain above the resistance. So the question is, where is my previous peak that I should look out for? The first one is here and the second one is here. If you can see, between these two peaks, they extend this line, you can see multiple times the price actually interacted with this very wide zone before rallying. So next time the price took a dip, it came back here. However, just assessing this high and low is not going to be enough for your entry points. You also need to look at the momentum indicator, or personally, that is what I prefer to do. So the first thing I will do is I will look at the momentum. So here on the daily time frame, when the price was consolidating between the range of 1475 and making the low around 1370, the RSI of the daily time frame started making higher lows, which means there is a positive divergence. Now, potentially the good entry point would be once this high price gets breached. So 1475, above 1475 is where I would potentially like to make an entry. But what if I saw this setup when the price reached this level of 1530? Should I buy immediately? The answer is no. When you're swing trading in the market, reacting to the price is never a good idea. Always use buy GTT orders, identify the best entry point, and wait for the price to come back to the best entry point. So what if the price doesn't come back to the best entry point? You miss that setup, and that is totally okay. You have to be willing to let that go without compromising on your trade setup. Because see, during the bull market, you will get through with that kind of poor discipline or poor practice. But when the bear market comes, if you've not honed your skill set, if you've not strengthened your discipline, then constantly reacting to the price is actually going to prove to be a very costly mistake. So in this kind of situation where I can see that best entry point has been missed and the price has already gone back up, I will not get deterred. In fact, I will set a GTT order, right? And in order to set my GTT order, I have a system. Because see, when you set a buy order, you have to take care that you don't forget about it. Because again, the market can turn bearish anytime. So if you set up buy orders during a bull market and you forget about them, later the market turns bearish. If you've not managed your buy orders actively, they are going to get triggered at a time when you don't want them to get triggered at all, or when the chart setup has significantly changed. Now, I use Zerodha, and Zerodha gives you 365 days validity on your GTT orders. But within 365 days, the market momentum can change significantly. So there are a few tools that I like to use. Tool number one, a white ray. So when I'm setting a GTT order, I will draw the white ray. I will write a short name for the account in which I'm setting my buy order, and I will set my quantity. So my quantity may be 100. I will set the quantity, and this is the price at which I am basically setting my buy order. Done. Now what I will do is I have a certain expectation that okay, from this date, say 19th April, if I want to make a position for the to take advantage of a potential retest of the resistance at around say 1750 rupees, I think that can come within maybe 1 to 2 months, right? So I don't want to have this buy GTT order beyond 2 months in time. So beyond 2 months in time, what I will do is not so 2 months would be my entire holding period. So only 2 weeks in advance, I'm going to draw something called a vertical line with the keyboard shortcut Alt V, and on that I will set an alert. What alert will I set? I will just set the alert, check GTT in whatever account for whatever quantity, and 2 weeks later, this alert is going to tell me that hey, go back and check whether your GTT order got triggered or not, whether you need to change or cancel the GTT order, or whether you need to simply shift this line further. So suppose this particular order, suppose I hadn't set it on the 19th April. Suppose I missed the 19th April mark. The price came down to on 14th May and then went back up. Suppose I am seeing this on 11th June, and this is where I have set my alert. Now, at this point, now when the price comes back down, now because technically my target has already been achieved and I completely missed out on this trade, I got this alert today. Today, I'm going to go ahead and delete all of these drawings that I've made because I don't want to take part in HDFC Bank anymore. The reason is also that I have other sectors where I've identified better opportunities with better risk reward ratio, better target calculations. So let's take a look at one such stocks, and I actually want to discuss Infosys with you. So IT stocks have been giving fabulous rally, and Infosys is actually one of the stocks where we have an active position in a swing trading program. And the first target that we had was around 1700, which has been achieved, but we continue to hold on. So I want to discuss with you what encouraged me to, number one, give position in this. Number two, how did we manage it? What were the mistakes that we made? How could we have done better? So that maybe you can take inspiration from it and do better swing trading at your own end. So based on the markings on this chart, you can clearly see Infosys is one of those stocks where I swing trade actively myself, and I also give regular recommendations to my members. So we captured this entire swing, then we sat out of the stock for this entire downside, and then we re-entered the stock here. But you will see between the exit and the re-entry, we did try to take or participate in the stocks in the first week of April, but we got stopped out twice of that position. And this is very common. So the first reason why we attempted entry over here was basically because this was a very important support zone. Right? So when we have a observation or when we have a opinion about a stock or where its support resistance, it's very important to also identify what activity or what action of the price is going to invalidate your view of that particular stock. So using stop loss is very important because see, if you don't use stop losses on your swing trade positions, there are two kind of costs that you have to incur. One is the absolute cost, which is visible in terms of the loss that you incur on your positions. Number two is the opportunity cost. So suppose you're somebody who's not comfortable with using stop loss and you're of the opinion, hey, I don't use stop loss. So what I would have done is, since I know Infosys is a very good company, I would have continued to hold on to this stock. As a result of that, for a period of 75 days, your capital would have been stuck in Infosys without yielding any profit for you. So break even. So what I did was, when my stop loss got triggered here, I tried to identify the next best entry point and I waited for a confirmation. So here I could see that, okay, fine, this is another potential support level based on this previous activity. Let's see what the stock does when it goes there. So when the stock went there, stability started to come back in RSI, and I could see that the RSI gave a positive divergence. So a positive divergence on the RSI is actually a very good indicator, is a very good indication of a potential beginning of a bull run. Okay. However, there are some pointers that you need to take care of in RSI positive divergence observation, which I will come to next. So RSI positive divergence was one strong indicator. Test of the next resistance or the next support was another strong indication. Here, compared to this entire rallies, this point was around 61.8% retracement as per the Fibonacci that you can see here. That was another indication. But when it came to making the fresh entry in this stock, I actually waited for the stock's rally to get confirmed. When did I get the confirmation? I got the confirmation when the price broke above the previous resistance. So the peak of the previous resistance got broken here. And then I set a GTT order to enter around 1495, which is also where I gave the call to all the members to participate in the stock. Over there, with a very small stop loss, we were able to capture this run up of around, now going into around 15% in 6 weeks actually. And we continue to ride this with trailing stop losses. Now coming to the RSI point that I was discussing, that with respect to RSI, there are a few things that you need to take care of even when you see a positive divergence. Because in a bull market, positive divergences, or in a trending market, they work really well. But when the bear market comes, even if it's a trending bear market over there, how do you wait for confirmation? There are one of two ways one of the two things that should actually happen before you take a position. Number one, the first thing that can happen, which is a very good indication of a potential beginning of new trend, is number one, the RSI itself creates a higher high. On this positive divergence, if you see, breakout of the price between the 2 points of the divergence on RSI is your confirmation. So the RSI also needs to break out above this. So this is the RSI confirmation and this is the price confirmation. In this situation, you will see both of them have actually happened pretty much at the same time. Sometimes it happens that the RSI may give a little bit sooner confirmation, or sometimes even price may give a little bit of a sooner confirmation. So once you get this breakout, again, don't enter immediately, because had I entered immediately here, I probably would have entered around 1530. Again, use the buy GTT order like I told you, and set your alert or set your entry price at a potential support. So once I get a breakout of this zone, my potential entry point becomes this 100 EMA, which is this green line here, or this zone which is passing through the price around the level of 1495. And this is where I set the order. So got triggered, ride the trend. Don't exit it if you feel that the market is going to turn negative or you're listening to a lot of analysts. Let the price break structure. So as long as the price continues to make higher high, higher low, you are in a bull trend. And even for that purpose, don't go down looking at the 3-minute time frame, because it is not going to give you the right perspective. If you use very small time frames to set up your stop losses, you're going to get stopped out way more frequently in the market, something that you don't want. So if you are making a decision, say on the 75-minute time frame, for the purpose of setting your stop losses also, it is important to stick to 75-minute time frame. Now, the reason why I have used a very aggressive stop loss here is, number one, I have a substantial amount of unrealized profit on the stock. And number two, if you see, a higher high has already been established by the stock price here. So my stop loss now is at 98 on Infosys. So when you're making entry exit decisions on this for trading in the market, especially swing trading in the market, first thing that you need to take care of is number two is the momentum of that trend. Trend should be bullish on at least one time frame higher than your decision making time frame. So if I am making decisions on the basis of 75-minute time frame, then there should be a strong underlying trend or strong signal of reversal on the daily time frame. So we saw the positive divergence on it. Number two, momentum. It should not be that there is a strong underlying trend, sure, but it is leading to exhaustion. So there shouldn't be negative divergences on weekly or daily time frames, right? Because then the risk of participation can increase significantly, risk reward ratio can come down, and volatility technically can be really high, which you don't want to experience in your positions, right? That's just choosing a very rocky boat to cross the stream when there are better options available. Number three is, when you're entering, look for the previous high to place your buy GTT orders instead of reacting to a price and buying right after a breakout or confirmation. Okay, wait for the price to come back down. Number four, when you're trailing your stop losses, don't trail too aggressively. Use your decision-making time frames, not very small time frames like 1 minute or 3 minutes, because then you might end up setting very aggressive stop losses, which can lead to unnecessary whiplash. The next point, when it comes to exiting your position, it's a good thing to determine your targets in advance. There is more to be unfolded. You should definitely stay with the trend until and unless it absolutely reverses or triggers your stop loss. So in this case of Infosys, my target was 1700, but I can see that the trend that is unfolding is still strong. How do I know that? Based on the volume observations. So if I can see that the volume is still increasing with every increase in price, clearly the underlying trend is still very strong. So I'm going to continue to stay with the trend for that purpose. 30 minutes on the mark, and I'm done with my discussion about entry and exit for the purpose of swing trading in the market. Now we will open the dice for our Zoom participants to ask us any questions that they may have. If you have queries, you can either put that in your chat, or you can also put that you can also come off mute and you can speak out your queries.
Hi, this is Akhil here.
Yes, Akhil.
I just wanted to understand, like, how did you come across, for example, how did it make it to your watch list? Was there something that you had previously bought or something, or how do you basically bring new stocks into your watch list?
Perfect. So see, I maintain a watch list of around 200 stocks, which have been taken from 8 top indices. Mid cap, small cap indices are obviously there of Nifty. There are some strategic indices also that I like to use, like momentum movers, so on and so forth. Out of all these indices, so what I did was I took the constituent stocks and then I eliminated the stocks which are fundamental issues or corporate governance issues. So you will see none of Vedanta or Adani stocks are not part of my watch list. So now that I have this watch list of 200 stocks, I have added all these stocks to a quant model, which is based on relative strength. So that quant model shows me a ranking of how the price activity. So it will rank the stocks based on their price activity from a certain date that I have to decide, right? So what I do is every 2-3 days I go through this list. How have the rankings changed? Which are the stocks which have, say, jumped up by 20 points, by 20 positions? And then I will assess them. If the stocks that have moved up by, say, 20 places is too less, then I will simply look at the stocks which have moved in the positive direction. So a move in the positive direction rank wise in a list of 200 stocks basically means that the price has done better in these stocks. So I want to see whether these stocks will do better than they were doing in the last couple of days, whether or not there's any opportunity. Typically what I see is that, say, if I, out of the list of 200 stocks, say 50 stocks made it to my, what I like to call, identify watch list. Out of these identified watch list 50 stocks, at least 10 stocks will be there which are giving very strong positive divergences that I want to further monitor, further study for the purpose. It gives me a very good hit rate, it gives me very good churn, very good success rate. So this is the whole process. And as you're aware, the advanced swing trade training program that we are doing, in that you will be taught, you'll be given your own copy of this relative strength quant model that I have created, and you will also be taught every single class how to use this model to get optimum results. So Akhil, I hope that answers your question. All right, perfect. So that was a very good question. And when it comes to swing trading, right, initially what I used to do is I used to just look at the stocks randomly in my watch list, or I used to set alerts of 30 on 15-minute RSI or 30 on 75-minute RSI. But I learned that is not very effective, because even after the RSI gives a positive divergence on the, say, the 15-minute or the 75 or the daily, the time from the gap between identifying that positive divergence and the positive divergences getting realized is different for different time frames. And if you don't have a strong monitoring mechanism to keep track of the stock, you'll miss out on a lot of upside. And see, I have been in the market since the past 12 years, and I have probably, irrespective of what returns I have made, which have been good from a market perspective, I still have a view that I could have achieved if I had acted exactly the way I should have acted on all the opportunities that I had identified. Right. So there is so much more potential to be unlocked in terms of profitability. And the only thing that I see contributing to my better or improved results is having a stronger monitoring mechanism. And every day as I practice in the market, my objective is to strengthen my mechanism like more and more and more, so I don't miss out on identified opportunities. Forget about the stocks that I haven't seen and have rallied. Even without them, the potential to book higher profitability is just immense. Like, I'm talking multifold opportunities, right? So we have a very good system. We just need to sit and strengthen it with practice, with time, and of course patience. Let's move on to the next query. So Ashish is asking for the Elliott wave analysis of CDSL. Fine, let's take a look at CDSL. So CDSL, let's start with the largest time frame. Let me actually open another layout, and I'm going to remove all the drawings to do the analysis from scratch. So let's just focus on the price first. So as you can see, CDSL first of all is a super trender. It gets into a trend and it stays with the trend for a long period of time. The previous leg of uptrend that was drawn, I would say this could be potentially the 5-wave structure, 1, 2, 3, 4, 5, if you can understand my drawing. So this was clearly the ending of 5, right? Definition of 3 and 5 in here can be a little bit difficult to specify, but this is clearly the end of the first 5, because this looks like a very clear cut ABC. Now, if this was the ABC, then that means this is the new trend, of which the first leg is gotten over already, and this was a consolidation. So now this looks like the beginning of an uptrend, and mind you, this looks like just the beginning of a new uptrend. So I would say this is where a new trend has started, right? So before I go down to lower time frames, I would also like to draw my trend lines right here itself. So I will use these 2 bottom points to actually join the lines, and then clone this same line, get my internal trend lines. These internal trend lines become very good potential support and resistance as the price unfolds within its trajectory. So now you might think that, hey, CDSL is already at lifetime high. Should I buy? Should I not buy? So don't think of lifetime high, lifetime low in stocks in terms of a linear trajectory. When you do that, right, you're thinking every stock is moving in a channel like this, right? But that is not true. CDSL does not have this trajectory. CDSL has a very strong sloping trajectory. As per trend of CDSL itself is just so strong that in completing its correctionary move itself, it declined only 43% from the peak. And the moment it started off into the new uptrend, by the time it was done with the first leg of upwave, it has already created a new lifetime high compared to the previous peak. However, within the trajectory of CDSL. This was basically the first wave that unfolded. Here we saw some wave 2 consolidation, and this is the wave 3. Another thing that contributes to my view of this being the unfolding of the wave 3 is the volume. If you see on this weekly time frame itself, this is the volume chart. Okay, forget about the RSI for now. This is the grams comparing the day average versus 100-day average of the volume. So since this is the weekly time frame, the setting has been done accordingly. So 20 divided by 5 and 100 divided by 5 is the fast and slow length respectively that we have used, right? So what this is telling me is that whenever the price is rallying up strongly, it's also experiencing very strong volumes, which is exactly what I want. So here, strong uptrend and some consolidation. For me, this looks like a potentially good entry point in a stock like CDSL, which has a very strong uptrend unfolding. So that is for you, Ashish. I hope that makes sense, right? And since we are looking at the 75-minute time frame, we can also clone more trend lines and get a better sense of where potential next resistance is. So the immediate resistance would be around 2700, but since CDL is now on the upward trajectory and it has already taken resistance on this trend line, I would assume easily that the next time it pushes through, it is going to aim for at least the very next trend line. So the target would be around 40% from here. And where would the stop loss be? So I can see that CDSL has a resistance at this level here. So the potential stop loss, so this is the immediate support zone. So if this support zone breaks and the price comes around 2100, because it is going to, there's a confluence of supports here. 20 EMA is there, 100 EMA is there, trend line is there, the zone is there. So let it take the support of all of those things and maintain a stop loss at the level of 2100. If it breaks below, that means it might go and want to retest this lower trend line, which doesn't seem very viable to me because it would have to establish a lower low and break price structure in the middle of a very strong uptrend that's unfolding. Very unlikely. So 21 gives us a very safe stop loss to maintain in CDS. Who's next? Mohit. Yes, Mohit. What can I do for you? Hi.
So I was thinking, like, I have heard somewhere that 70% of the breakout.
Yes, absolutely
so
correct.
How do we identify that the breakout? Like, for example, recently I have observed, I think on Monday, HDFC Life is about to give a breakout. So if I want to identify if it is giving a breakout for that certain level, how would I make sure?
So first thing I would want to know from you, Mohit, is what do you identify as a breakout here? Just breaking above a previous resistance is not a break. So see,
previous peak.
No, that's not a breakout actually. I would consider a break. See, this is what I would consider a breakout. I wouldn't consider this as a breakout. Why would I consider this as a breakout? Because just prior to this, the stock was in a downtrend, and this is the first time it has created a higher high, higher low. Right? So here it gave a breakout, it gave a pullback, and then it moved up. So the reason why you've heard that 70% of the breakouts fail is that most of the classifications of breakout itself is wrong. This, my friend, is not a breakout. This is a trend continuation. Considering this is a breakout in the first place is not correct. So if you want to look for a breakout, you need to identify that at the beginning of the trend. See, if you call this a breakout, look at the amount of uptrend that has already unfolded. 25% in 41 days. There is a better chance that the stock is closer to exhaustion. If you look at the RSI has already gone overbought. So here, if you identify this as a breakout, again, like I said, don't be reactive. Don't react to the price. Identify the next best entry point and set trap for the price there and wait for that to get captured before you participate. So here, if you had identified this breakout, set your trap, price would have gotten caught in that. You would have enjoyed this. This here is not a breakout at all.
Like the patterns of reverse head and shoulder, we should not be looking at very keenly, I believe.
No, you should not look very keenly, because the thing about chart patterns is that today in the world of technicals, any person who enters fresh, the first thing they learn is head and shoulder and cup and handle. Anything that is mass knowledge does not have an edge, will not make you extraordinary money. In fact, these very common chart patterns are now used by experienced traders for actually reverse or contrarian trading. So you don't want to use what does not have an edge anymore. Because in the market, if you want to make money, having an edge is everything.
At least I'm right in thinking that 70% of them fail. That means this is the new definition.
See, it's very difficult to, like, the statistic that you're saying 70% is not backed by any scientific data. So it's not accurate, because like I said, within that 70%, most of the things that are being called as breakout are not breakout. Like this is not a breakout, for instance, what we're seeing on HDFC Live chart here. But if you consider this as a breakout and then say that it failed, then, that's not how it's going to be.
Got it. Thank you.
Yeah. All right. Do we have any more Zoom participants that would like to come off mute and
Hi, Kavita. Priyanka, you mentioned in the chat box, it's like Tata Power, because of that. That's Industries. So,
okay.
Power Tech.
So, Priyanka, which is the most important stock for you? Because we have participants also. So, we'll take a look at one stock.
Yeah. Lux Industries.
Let's go for Lux Industries. So Lux Industries is one of the stocks where I was potentially looking for a fresh entry from a long-term perspective, but then I stayed away because when I did the research, I wasn't very comfortable with the corporate governance of the stock. However, That being said, it's still on my radar, but because it doesn't meet some criteria for me, I decided to not participate in the stock. Right? What I can see here, see, this is a very good example of a breakout that I was just discussing with Ashish. This stock has given a nice breakout above the level of 1659. So this is basically, and this was also a very good example of a rounding bottom, right? So the thing is that now it has given a breakout and confirmed an uptrend. So should you react to the price and enter? The answer is obviously no. So a potential entry point would be 1716. So Priyanka, for you, do you have an active position or do you want to make a fresh position?
I did that position. Yeah, I already took the position for this.
Acha, you already have a position, right? So you
Yeah.
continue to hold. So see, for anybody who wants to make fresh position, around 1715 is where they should have their price trap set. And for those already holding a position, you should have your stop loss slightly lower than that level. This is a little bit too close. Below this 500 EMA, you see this 500 EMA is there. Then below this entire this entire zone of key support resistance. So around 1523 is where your stop loss should be. And you should seek for a revision in stop loss if either of the two things happen. Number one, this resistance at the level of 20 to 15 gets breached. That is when you should look to revise your stop loss. And based on the way the trend is unfolding, I would expect the stock to at least rally up to the level of 3400 from here. Make sense? Thanks, Priyanka. Let's move on to Sahil. Yes, Sahil, how can I help you today?
So much for this lovely session. Question: if you can look at LTTS, which is Lifeline to Growth Technology Services.
All right.
IT is in an uptrend and this has corrected a bit. So just wanted to.
Yeah. So LTTS, I can see it had given a negative divergence on the daily right after it achieved my target here. And then it declined. But once it was done declining, it also gave a very textbooky positive divergence and started to go up. Now, from a support resistance angle, if I assess this stock, this was a very good entry point, but naturally, very few people would have been able to catch that. And if I also take a measurement of this entire rally, this was also the 50% mark. Fine. So this is gone. So let's go to 75-minute. Now on the 75-minute charts, what is evident is this extremely strong positive divergence with positive range shift. So the previous peak that I'm seeing is somewhere around this level. So this flag that you're seeing basically means that even I have assessed LTTS in the past and I am looking for something more favorable to jump out here. So this rally that unfolded had strong volume participation, but the next leg of rally did not see a lot of volume pickup, which was a signal to me that zone of around so I'm going to delete this red line. We don't need it right now. So this zone of around 4600 to 4700, so 4650 to 4700 is potentially a very good entry zone, which also coincides with the 250 EMA of the daily time frame. Typically, when a stock is recovering from a bit of a downside, the 250 EMA becomes a very good support zone for the stock, especially if it has sustained below the 250 EMA for a while. The magnetic power, you can say, of the 250 EMA or the 200 EMA basically is pretty strong because it's a very commonly used indicator. This, I would say, is a potentially good entry for this stock. And should you take entry here, then your stop loss on the stock should be, so if this is the entry, then somewhere here is where your stop previous target itself, because let's see if at this stage I can take it for granted that this, yeah, so the weekly time frames uptrend is very strong. So I would expect that this high is going to get breached, because if you see on the weekly time frame, the higher high, higher low stock target for this stock at the next trend line resistance, which would be around the level of 60, even 7,000 rupees. So it gives a very good risk reward ratio. But again, LTTS is a kind of stock that once you buy, you want to hold it for 6-7 months. Does that help?
Thank you so much.
Perfect. So I would request our other Zoom participants to please raise hand and ask their question. Yes, Mohit, how can I help you?
LTTS example, you look at wave counts, like when you are analyzing a stock for entry or exit or anything. Do you look at the Elliott wave counts for any particular stock? Like, so we will look whenever there's a fall. We will want to identify certain important levels to check a possible re-entry or a bounce back. But what about the wave counts? Do you ever consider those as well, or mention?
I do consider wave count, but it is one of the tools that I use. It is not the tool that I always use. Like momentum is a tool, or RSI is a tool that I always use without, right? Fibonacci is also pretty much what I always use, because I need to get a sense of the proportions of correction versus rally, because it tells me a lot about the strength of the trend. Now, with respect to Elliott wave analysis, the thing is that sometimes it may be very evident, sometimes it may not be evident, right? So for example, in LTTS itself, if you see on a 5-weekly chart, clearly there is an uptrend unfolding, and it also looks like wave 1, 2, 3, 4 has unfolded and 5th is unfolding. This was definitely wave 3 based on the sheer momentum and the length and the structure. This looks like a wave 5 unfolding. Now, since we've not forged a new high right now, but there are other, yeah,
Sure.
exactly. So I would expect this peak to get breached and a higher high to be established. Why?
Right. Right. One more thing, in the previous the stock before that was discussed, Lux Industries.
Mhm.
So
It is a super trender. If you see what is a super trender, basically, super trender is a stock that once it enters a trend, it stays in that trend. Call it a slow mover because here, if I capture the entire trend, it's moved up like 415% in just 575 days. I would not call this like a fast mover. For a fast mover, I need to see at least 1% move per day. Those are fast movers. Everything else is a slow mover, in my opinion. But this is a super trender for sure. I haven't drawn the trend lines because I didn't feel the need to draw a trend line, but we can do that, of course. This would be the trend line or the trajectory if I had to draw one.
thank you so much.
Of course. So we have a advanced swing trade technical training class starting from 6 p.m. It's already 5:55. So I will take your leave now and we will move on to the class. However, if you've liked this session, if you watched it, and if you enjoy the content that was shared, please don't forget to subscribe to my YouTube channel, give a thumbs up to this session. And for the Zoom participants, I would request you to please leave a small feedback before you go. And also to the audience members, if you could just comment your thoughts on the session, it would absolutely make my day. So thank you so much for taking the time and joining the session. I will see you again on Friday in the Nifty, Bank Nifty intersector analysis and more technical analysis related knowledge. Thank you so much.